Another wonderful Wednesday as we see the market is opening or looking to open on a gap down. We've got about 10 minutes left, so there is still possibility, with a rather small gap from the low yesterday around 79, trading, about 7 handles below it. So there is definitely still possibility that the market doesn't open up on a gap. But we can see that overnight inventory has pretty much liquidated overnight. What we are expecting, or what I'm kind of expecting early on in the session, is to let some of these momentum sellers pour into the market, right? People that are trading price and not value, right? We saw yesterday value was higher, overlapping to higher. And so we get a little bit of liquidation overnight after getting a strong response off of that high. And today we'll look to see if these responsive sellers are still going to be out in force, right? Willing to initiate below yesterday's low, or if they're going to let that correction to overnight inventory occur. The big level I'm watching is this 87 level, basically the value area low from yesterday, and kind of back into the meat of yesterday's trading session. If we get back up in there and start to hold, I think there's good opportunity to trade back up into that 4,300, 4,306 level where that Globex point of control is at. I do think early on, if we don't see a strong reaction or correction of overnight inventory, especially on such a decent move down, then we may be seeing some stronger sellers and the market may be a bit weaker than we are anticipating. And that could lead to a test of the prior day excess, that T2 excess at 57.75. And we'll see if responsive buyers show up at that point. There will be opportunity to get short. I think if there's a little bit of inventory correction, we don't get back into that previous day's range and don't close the gap. We want to go with any gaps, right? Assuming that we open up today's market on a gap to the low side. We have this kind of overlapping area that just kind of chopped up back from the 12th, right? This could be a, really just ugly structure. And if we, if we look at the overnight session, remember they cleaned a lot of this up overnight, but that might not have been enough to kind of fix this structure. With that responsive seller that we found yesterday, pretty much above that 200 SMA. Get the shit out of me. I'm kind of expecting a possible balance below this 4,300. If we take a peek at the ES here, how much time do we have? Oh, we've got time. Okay, go to our trade tools. And we're going to look at all of the series from August 22. These are week 4. We don't want that. Wednesday, week 4, Wednesday, week 4. Okay, so we can see here, if we'll look at open interest, we want to look, we don't need to look at 50 strikes, let's look at 14 strikes. We can see where all the high volume in these calls are at, right? You've got over 5,000 volume open interest at that 4,300 level, making it a spot where we can kind of assume that if you have a lot of people that are selling calls and selling puts, that this is kind of the level that they're going to be looking to, take profit at, basically. If they have these calls and they start to get in the money, that they're going to start to take profit, right? And then the same thing here on the downside, this 4250. And if we look at that 4250, that 4257 is kind of right here at that low, right? So right back into this kind of weak structure. You could see the 4250s right here where this weak structure is at. And so I'm kind of just assuming that, maybe we get a little bit of this, right? Especially leading into today's FOMC, the Fed minutes today, is going to be a big mover. Adam, good morning. Trin, good morning. Patrick, good morning. Other Adam, good morning. Tommy, good morning. I'm doing well, yeah, thank you. You know, so that's kind of what I'm looking for, I guess, pretty much this morning. I don't really see a lot of opportunity really early on. I think that today we're going to want to be patient extremely. Um, you know, and I think another key today to think about, if we look at this kind of larger scale on the daily, we've been just one time framing up, right? For, you know, 1, 2, 3, 4, 5, 6 days in a row. Well, it looks like that's going to end today, right? For the most part. You know, maybe not. We've got 15 minutes until, but, and then, and that's just a daily one time framing is not as important as it would be a weekly. And you can see I have the weekly low marked here, 43 or 41.13. We have this kind of equilibrium down here on the daily. So it would be a pretty big move to get that cessation of one time framing on the weekly. That would be an entrance of a intermediate time seller or intermediate time frame seller. So that would be pretty significant move. I'm not really expecting anything like that today. Oh, hang on, I'm getting a phone call from. Hello? Yeah. It actually was about my car, but it was about my title, because I had to get my title transferred over here to Pennsylvania. The title for my car, to get it registered here, they need a transfer. Jason, what's up, man? Yeah, so had to take that one real quick. Roach, good morning. Let me post this real quick, and then we'll but a key here really is that we're going to get that cessation of one time framing on the daily today, and that's just like our first sign that, oh my god, they're calling me back. Hang on. Hello? Hello? What's that? Yes. Yeah, she's gonna be on there. Okay, yeah, she'll be there with me, yeah. No worries. You too. Bye. All right. Yeah, so that cessation of one time framing is gonna tell us like that we are seeing a little bit of a responsive seller. The strength of the responsive seller is really kind of yet to be seen. We haven't really seen what the market will bring once the cash session opens. We are, you know, as it gets closer and closer, we've got about 12 minutes now that the gap is getting a little bit bigger here. So there's good opportunity to open up on this gap lower. Um, you know, we'll kind of see. I don't think it really changes the uptrend. I think it more or less is just a liquidation leading into these Fed minutes early on. Pop, good morning. Kevin, good morning. You know, because that kind of makes sense. It's more of an unknown, especially just the overall sentiment of the market right now, based off of, you know, kind of what's going on. The Fed minutes are old. We do have to remember that. So we could get a big nothing burger in there. That could be just nothing, could be nothing new, and that would actually be bullish for the market if there's no real new news. It could just be a neutral move. There might not be any reaction off of it. If they say that they need to increase quantitative easing, increase interest rates to keep controlling inflation, or if they're talking about something like that, that could be, bring some downside into the market and bring a push, uh, bring a push pretty hard down. And so that's just something that we want to be paying attention to. But yeah, I mean, the key here, are kind of what we're looking for early on. If we look for look for a trade, or let a trade come to us, we should say, we want to see this correction early on, and that would give us the opportunity to fade the market, right? And the first target is going to be that 87. We saw it act as a pretty big level yesterday. The market barely got below it for a couple of seconds and then kind of pushed above it, and that's kind of the divider of these distributions. And so that's kind of what I'm thinking this liquidation is, more or less, is just, you get a little bit of liquidation, and if these sellers that are still trapped short, because guaranteed they are with this only this little tiny C period that came in here yesterday, this is the T2 range over here. If we start to see them really start to cover shorts, and start to get up back into yesterday's range and above this 87, I think there's opportunity to get on board and catch some of that early on. And that will just be really the only thing I'm looking for early on. I don't really want to get short early on, especially not down here at the lows, just because I am kind of thinking that there might be a little bit of a fade early on. We did see a little bit of volume pick up yesterday, but I'm not really too sold on the downside. I think there might be some opportunity if we touch back into yesterday's excess and don't get back up to this 87.90 level. There might be some opportunity to fade it down. Good morning, Will. Could be one time framing on the weekly too. Yeah, we are one time framing on the weekly, Jason. Yeah, for a while now. 1, 2, 3, 4, 5, the 6th week in a row now. So pretty significant. One time framing off of those lows. And I wouldn't be surprised, honestly. I mean, if we did come down on a weekly level, right, and start to balance, and that will just kind of put this trend line back into play, or it's still in play, right? It hasn't broke above it, but it will hold this trend line into play, and we try to fill in this gap leading into, you've got Jackson Hole next week, FOMC minutes today, or Fed minutes today, right? So there's a lot of news that's kind of on the docket that could come out, and we can kind of see from there. Morning, Dr. BJ. We'll definitely just be having to kind of stay cognizant of that, and understanding that early on, just be prepared for it. Let's take a little peek around the block here. We've got the dollar kind of ticking up here a little bit. We've got Bitcoin coming down, just following the market. You've got oil ticking up for the first time in a little while here. That's kind of interesting. It's pretty much just been getting hammered down for the most part. Little rally, and then pop, lock, and drop, and then kind of, hasn't made a lower low in a little while. So it's kind of interesting. We'll have to watch that today. Nasdaq leading the pack to the downside here, looking to that 13,489 level, and then we've got that longer term trend back down here. It's above it, but back down that 13.2. Bonds are also down here. Apple looks like it's basically just sitting inside yesterday's range, so it won't be opening up on a gap. Same thing with AMD. Amazon still trading inside yesterday's range. Google looking like it is below yesterday's range, so it might be opening up on a little bit of a gap. Meta still inside yesterday's range. Microsoft opening up on a gap most likely. Netflix opening up on a gap most likely. Tesla still inside yesterday's range, but at the very low. And you got the VIX ticking up here a little bit after getting back below 19 again yesterday. So, but not really a huge spike, right? Not really anything crazy. I'll go ahead and mark this level here. Come on, go down. All right, so because Apple has kind of been the leader lately, early weakness from Apple should give us a little bit of indication on kind of what people are doing, especially because Apple's not below its low of yesterday. So that might give us a little bit of indication on what these early traders are trying to do. And that can give us a bit of insight on what we can look for early on. Go ahead and play some Reveille and get this day started. Let me share this out. All right. Now we're pumped and we're ready. And I appreciate the feedback yesterday. I'm always looking to try to improve the stream. So I've taken some notes of what you guys would like to see, and we'll start incorporating some of those things into the trading session. Curtis, turn it down. Let's get after it. I like it. So we can see all this time getting spent in yesterday's distribution, or in the T2 distribution, the lower distribution. And that's what kind of makes me think, especially we're putting in that poor low, it makes me think that it's more of just a liquidation than new money selling. I do think we saw a responsive seller yesterday, right? As that we basically hit that 200 SMA, and then the market really just kind of fell off of a cliff. All stars, what's up, man? And it was a pretty strong reaction. And if you're watching the time in sales at that time, you just saw like big negative, uh, big like sell trades come into the market at that time. I wanted to mark this 200 SMA real quick. $43.09 quarter. Got about a minute left until the market opens up here. Yeah, there was a lot of negative trades, a lot of it could have just been bunch of profit taking, but it was a lot of negative delta trades coming in, people selling into the bid. It looked like aggressively. Back from vacation. Nice. Still not in the zone. Bears in the house. Yeah, it's It's tough to go when you go on vacation and come back to the market. Tough to get back like into the zone and find out where the groove, like the emperor. More than dead. All right, ding ding ding. There's the bell. Let's see what we get early on. Warden knows the market's open. He's ready too. So one tick below the open, we start to get a little bit of a pop here. Remember, early on, we want to see, if they're going to close this gap. If not, we want to go with any gap that doesn't close right away. It's a tough trade early on in the session here. We're watching this Globex low, and that's going to kind of be a base here for us. That low's at 78.75 there, that prior day low. Look where all the volume came in at, right at the open. We're still in this lower distribution, so this is kind of where I'm thinking we're going to get some people coming out to, we've got those momentum traders that are trading price. They want to come in and sell. You've got people that want to get out of a short coming in, looking to cover their short. So it's kind of a two-sided trade here early on, I think. And it's going to be kind of a really choppy. I mean, it's kind of back and forth right here in these last, like, from that 74 to 71-ish level here. Buyers looking like they're getting a little bit aggressive here. See a big kind of little rip up right there. Looks like it's going to close the gap. In close at least. I just bitched out of my trade right there. I closed at 76.50, guys. I'm too scared. Might keep going though. The bot got into a put, 1 at 85. You can see the breadth is really not that negative early on. The sectors weighted over here is not really that negative. The breadth is negative, but that's normal because we're opening up on this gap to the low side. Buyers still look like they're lifting the offer here, trying to get up to that gap. Yeah, like I said, I bitched out early right there. You can see Apple catching some gas early on here too. Oh, my internet's being kind of slow here. More days until I'm done with this Wi-Fi. So not able to close that gap, right? About 2 ticks below it. Got a big offer coming in at that 76 now. You can see where all the volume came in up here around that 76.5. A key here for these sellers, right? A key here to show us that these sellers have a little bit of strength would be to break that open. If we don't break that open, That's just showing a bit of weakness from sellers here. So we want to see if sellers are serious about this, they'll break that open. They weren't able to close the gap, about 1 or 2 ticks short of it. Oh, actually about like a point short. AMD bounced, like I said, more put counts than yesterday at the open. AMD at open more or less bounced off from yesterday. So looking to close that gap, they got above where that big seller came in. They closed the gap. I closed that long trade too early. Happens. So the key level for me here is I'd like to see the market start to establish above 87. We did close the gap, which is going to give some buyers, some people that are still long from the previous day, an opportunity to cover at decent prices as we see their liquidation spots. So as we get up above this 82 here, you might see a little bit of liquidation or a little bit of profit taking from some of these longs. But no real strength from sellers there on that push back down, right? They kind of pushed back down, volume came in, pushed the market back up. So still looking here as if the buyers are in control. We do have a cessation of one time framing on the daily, right? As today's open was below yesterday's low. Still just kind of, monitoring here for continuation. See if these sellers are going to come down and start to initiate at these lower prices, or if they're going to be patient like they were yesterday and wait to sell up here. If we start to see some gas start to form above this 87, I think that target's going to become that Globex point of control, or that like 36 or 306, excuse me. Seeing Apple break above its yesterday's high here, coming up to that 175. So what we want to monitor for here, not really key acceptance into yesterday's range. I'd like to see acceptance into yesterday's value before I really start to believe in the long, right? We had a decent long off the open, but nothing really too solid yet. Mostly, to me, just kind of looks like more or less short covering. So fuck it. Remember where we saw that seller come in was around that 76 half, and you can see right at 78 is where that seller got squeezed off. Right, so that when we didn't close the gap, people got short. It auctioned back down a little bit. They put their stop right below the gap fill. When it got filled, you got a little squeeze up, and now we're back below yesterday's low. If you look at the sectors here, for the most part, everything is, I mean, it's below yesterday's low, which is why we have this negative breath, because the breath here is monitored from yesterday's close, whereas the sectors are monitored from yesterday's, or from today's open. So you can see the Nasdaq opening up on a pretty decent gap down here, and coming back down to its open. This red line I added yesterday, you'll see it on both sides. It's the previous day's close, just to make it a bit easier visually. All about making things easier visually. TJ, what's up, man? You closed yours as well. Started seeing some selling early. Got 11 points. Let's go. Lecker, what's up? Thomas, what's up? Dan, what's up? Smells like a rug pull. Yeah, I mean, it'll be interesting today to see if, to kind of see if, I mean, it's tough really, because I don't know. I don't really see the strength in the sellers yet, to be honest. Like I haven't really seen anything too convincing from sellers as far as downside, right? Like we've seen some, some pretty decent moves, but nothing really kind of telling us that these sellers are that serious, at least. Why is this not showing here? Trying to get this. I can't see the chat. It's annoying the shit out of me. Go. Ripped a fat BTC short last night. Already paid for the day. Hell yeah, good stuff, bro. So back below this half back, remember what we're looking for here is strength from the sellers would be kind of showing us a push below the open, right? If the market doesn't break its open even, we can just assume, or I'm gonna assume that all of this trading down here and this liquidation from last night is people just taking profit, or I mean, excuse me, short covering from being trapped on the 15th. But a break of the open really could unleash the downside, and you could see those momentum traders start to pile in. And the key, if we do break the open, let's break that 66 right away. So here's the open. A lot of volume came in early on the open. What? Okay. IT sectors, yeah, IT sectors flipped red. We're starting to see a lot of sectors flip red here now, right? So a lot of short covering early on, the nice fade of the gap, and we'll start to see if they break the open. So no break of the open there. AMD's down about 1.3, Amazon down 2%, Google's down 1%, Meta's down 1.8, Netflix down 2.3, Tesla's down 1.4. Apple's still kind of leading the pack, not the strongest, but it's still positive. Yeah, the triple Q is getting just hammered. And then you see the Nasdaq up here just getting smashed. You can put the QQQ up here. We can put this study up here as well. That level, that 325 level down on the downside. So volume coming in down here, but still nothing significant, right? Like, it's just surprising to me that the market's not just smashing past this open. Yeah, the book does look super thin, Tommy. That's true. Oh, nice. I can pop out the chat. The bot just did a double down. Yeah, the offer, I mean, they're offering the 70-50 here pretty strong. 70-50 and 70, they're offering pretty strong here. But it's not making any progress yet. So just notice the tempo here, right? And so let's say we do break the open. We break the open, market comes down. If the market immediately comes back above this volume, that's going to tell you there's weakness in selling, right? I mean, we're already seeing it kind of weakness in selling because we're just coming down here, not breaking the open. Of course, we do want to be skeptical here, understanding that they could just be trying to convince everybody to buy before they just pull the bid and slice this thing down to the downside. But, you know, the tempo's getting kind of slow down here. We're starting to see it, you know, retrace here a bit after all that selling that came in on the 70. Most of those trades came in on the bid, so that's offers moving down. You know, and not much progress. 207 contracts on that move down traded just before the open on the bid, but 23 contracts on the low. Yeah, the bot just bought a second put. Yeah, that's what that means. Had to play both ways. I wrote down, look for a gap fill at 79 and be getting a previous singles 84 and took a short for continuation after the gap fill. Hell yeah, good shit, DJ. Braver than me. I didn't play both ways. This is where all that volume came in before that 76 half. That's where that initial seller was at, and you can see where the VPOC is at here too. What? Okay. So they hold that 76 level for there. I don't know why my Twitch chat isn't working. You know what it is? It's not you, it's me. It's the fucking I can see your Twitch chats right here now. I was trying to fix this thing, but for some reason it's not. No, it's my Streamlabs thing. My Streamlabs thing is like it's not showing my chat. That's why I had to pop it out of the YouTube. Yeah, so I see. I see it on there, TJ. Getting a little bit of a pop here. Back up to that 76 half. Look for that spot to get reoffered. 76 to 76 half. But I mean, still not breaking below the open yet. Every, well, everyone's just kind of, you know, thinking that eventually it was going to follow the market up because that's normally what it's been doing. It just hasn't done that yet. You're seeing a bid move up here on that 74.50. So look to see if it holds this 74.50 here and might get a little bit of a continuation higher. So 74.50 to 76. So here's your ping pong that we talked about yesterday, and it's a really tight range going in there. Shorted ETH and the bar tested upper structure, got out when the bar couldn't break over the previous absorption. Do you agree with what I did? Yeah, let me pull up crypto here. And Bitcoin's getting to that spot we were talking about yesterday, coming down to. So a reaction at this level from Bitcoin, we'll get to ETH next, but a reaction from this level at Bitcoin, if we see it get back up above this level and hold, that I think is going to be a strong candidate to get back up to that 24.91 level. But it's getting, yeah, it is just getting hammered here. Yeah. Yeah, I'm not sure. TradingView is not really that reliable to me. Okay, so you said you shorted ETH when the bar tested the upper structure and you got out when A bar couldn't break the previous bars and saw absorption. So is this A bar here? I don't have the TPO for this, so I'm assuming this is probably A bar if you're trading on um the US session. Let's see here. I mean, crypto, it's been just kind of weak so far, and especially with it kind of pushing down here, I think that your stop probably on this short could be 1855 on a break into back into balance. But other than that, you're pretty much solid to go short until you get down to this excess 1803 there. Call counter climbing a little. Market coming back down close to its open. You saw that 76 half again act as a, or 76 level get offered again. Oh, the previous bar. Okay. Here, so I mean, you said you were short too. I mean, you're still getting that. I mean, you got the cessation of one time framing there, but really the trend is pretty much down, and the trend didn't get broken at all. And you're getting back to that low of balance, and that thing kind of opened up the can of balance, came back up, couldn't get back above that open of the bar. It does kind of look a little bit, um, a little bit mechanical as far as the selling that came in on ETH. Uh, but I think that you probably could have held that short a bit longer, um, with your stop, probably looking, probably up here above this bar is probably where I would have kept my stop. Depending, I mean, it's hard because on crypto, the leverage really it depends on how how you know loose you can be with that stop. You know what I mean? It depends on how much room you can really give a stop if you're if you're looking for that, because I mean the leverage sometimes can be crazy and could really make your stop need to be tight, or if you're on low leverage, sometimes you can really give your stop some room to run there. There's that 76 half again. A break above it probably takes us back up into that previous day's range, which is that 78.75. 58.5, there it is. Counts are 31 to 200. Yeah, so yeah, sometimes and what you want to remember too is when we're getting stuff like that, right? So you put in that poor low, you want to pay attention to the retracement. That's going to be a key of if we are. So let's expand this real quick so we can get a little bit of here, let's actually just combine these because this will give us a little bit easier insight, and then pop this out so we can see a period here. And so we can see, right, it's almost a very similar setup in ETH, right? You had kind of just this low consolidation. You had one bar break up above the one time framing, and then the one time framing restarted, and then unable to break that low. When you're getting that, you want to pay attention to the retracement. So a period opens up, and we just rip up above that entire area, right? That's just telling us that the selling just kind of shut off down here, right? And I'm not saying it's the same for ETH, right? Because it's a different market, so completely different, completely different, right? But that's what you're looking for. You're looking for that retracement because naturally, especially after a decent move down, excuse me, shorts are going to cover. People aren't just going to hold on to profits, and you can assume that most of the people in the market, especially on the shorter time frame trades, like especially on a 30-minute chart, are intraday traders like we are, right? They're trading shorter time frames. So when they get into some profit, they're more likely to take profit than they are to just let it ride, right? So I don't think that you did the wrong thing. I think that you played it safe. I think that area at the bottom where those two bars were hitting was probably a good spot to take a little bit of profit. But and that's one thing I really do like in crypto is you can really partition your trades where you can take, you can take half off, you can take 75% off, you can take a quarter off. Like you can really break it off, is where the ES, right, you could take one lot off or two lots off or three lots off, right, depending upon how big your position is. But yeah, I think you're right. Like I think you could have took some profit and then just put your stop into the structure at the top of structure. And that's way, like, especially when I was trading crypto a lot, what I would do, like, let's say I got short here when this bar couldn't break this V high. So I get short here, it doesn't break, second bar comes down, it doesn't break. What I'm doing here is I'm taking profit and then putting my stop, my original stop probably here, moving my stop to right here. So even if it does come up, yeah, I'm going to give up all of this profit, but I'm still giving myself the opportunity. Yeah, it's above my entry, and then the trade just becomes a break-even trade, right? Because the key here, and I know everyone wants to get gains, 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 but the key here is to actually get into the trade, feel the emotion of the trade, and understand the trade as it's going on, because without that, it makes it very difficult to sit into a trade. And that's one thing that I'm trying to articulate a little bit better, because it's kind of hard to explain. And TJ really had me thinking about it the other day when he was like, I'd like to understand how you're able to just sit in these rotations sometimes. And and so I'm really trying to figure out what it is, that kind of gets me to sit in there. And I think that's a lot of times what it is I have a set risk early on that I'm willing to lose on this trade. And no matter what, I'm going to either lose that, and I won't be mad if I lose the trade because I have the set risk. And if I'm able to mitigate that risk, and then, if I sit in a trade for 30 minutes but end up breaking even, to me, that's not really a loss. That's a lesson learned, a gain. Because I don't really consider every trade that makes money a good trade, or every trade that loses money a bad trade, right? Uh, it's all depending upon the circumstances of the trade. Because I've won trades that were just, reckless, terrible fucking trades, gambles. Um, and I've also lost big on some trades, and they were good trades. They were just, poorly timed and executed terribly, you know? And so then that just gives me, I go into my journal, I write it down like, hey, this was a good trade. Even though you lost money on it, you just executed it poorly. And that's, a third of what we do here. A third is psychology, a third is market analysis, and a third is execution, trading itself. And, you can be great at, really good psychology, really good market analysis. And if your execution is shit, you could still not be a great trader because of that. So, yeah, that's it. Yeah, that's true. Yeah, and that's the thing too, is like you have to, what is going on here? You have to be willing to take profit off as well. And that's kind of like early on, I think in your trading journey, or at least in my trading journey early on, I was taking a trade. Even, I mean, today the first trade that I took 72 to 77, 76, 75, right? Fucking, and the thing traded all the way up to 84, and I should have just waited at least until 78, right? Because that was my plan. It's just I got nervous about the price action and then just closed it early. And so early on in your trading, I don't think there's anything wrong with taking profit early. If you put a bracket on for 2 points, especially we're talking about the ES futures here, but if you put a bracket on and every trade you take off is boom, 2 points, 2 points, 2 points, 2 points, and you're able to identify 2 point moves all the time, then you're obviously doing something right. And then you can start to add to that, right? You can start looking at it from a longer scale and saying, okay, well, last time I'm doing this, similar thing. I got long here and I take it off at 2 points, and now I'm comfortable with that 2 points, letting it get to that 2 points. Well, now where's a good spot that I could find structurally to take profit on, right? And so we're looking at this lower distribution where these two TPOs start, and you can see, right, that's where A ended, right at that level. So long started taking profit there when they got back into the range. So uh basic market structure there. But we got so nervous, I got so nervous that I just closed the trade early. And that should have been a key target. And then when we got up there and we failed, then flatten the trade. But as you go on, I don't really think there's anything wrong with taking these small profits. The reason a lot of people run into issues is that they take these small profits on their winning trades, but then when they're not winning the trade, right, they're willing to lose, like, like a fucking substantial amount. What's up, Kevin? Stop fucking trading it then. Stop trading it. That's what I'm saying. Like, it's I mean, it's sometimes it's just not worth it. Because especially when the volatility is low in crypto, that's a reason I haven't really been trading crypto, is because the volatility has just been so low. It just hasn't been worth it to trade it. Because I mean, I do like trading crypto because it's a good mover. Right. And that's just more of a longer term trade. Like, yeah, so a lot of times crypto trades will last, hours, more or less, than when you're in an ES trade. A lot of times it's lasting minutes. Very rarely do you sit in an ES trade for an hour unless you're holding on to a loser for an entire day or something like that. But a lot of times crypto trading, you've got to sit in there and let it go. And the thing is, you've got to be, you've got to set up that trade and be willing to accept the risk that you put on. And if it goes against you, you can't just panic and close, or panic and move your stop loss off thinking that it's going to come back. You've got to be willing to accept the trade that you put on. That comes with identifying your entrance, your exit, and your targets early on. Because I like my uncle Stacy was referring to, let's say we get long right here and our target is back at that A high. Well, as it comes up, it starts to speed up. And we're like, oh shit, it's going to keep going. Let me move my profit target up here. And it comes right here and then it goes, and you're like, fuck, right? That happens all the time. Especially in crypto. And it's because we're not really willing to take our planned trade, our realized trade, because we're looking for a home run, right? But these base hits will add up. And this is where your journaling comes in. When you have your planned trade and you don't take it off because you thought it was going to keep going, all of a sudden it doesn't keep going, comes against you, and that's how you turn a winner into a loser. And that I mean, there's a lot. It's not just like a simple thing, but it comes into so many. It's all a culmination of these these three things that I kind of group into becoming a successful risk manager. Trying to see the breath stay pretty positive here. Let's see if B period wants to say hi here. Still a very tight range though. Everyone wants targets and wins, but I like to concentrate on what my average loss is, which is a direct result of entry location and ability to scratch from good reasons, though, and not just panic. Yeah, I agree with that, Roach, 100%. Morning, Rays. Yeah, I mean, it really is like, it's, you can tell by someone's average loss. Like, I was actually talking to Jared about this yesterday. Is like he wants to just nickel and dime, and then when he needs to take the risk, he's just going to take the risk. But it's like, if you nickel and dime the market and then you're risking that one time that it does get you, it's going to wipe out a whole week's, months, days worth of gains. And if that's something that you can handle psychologically, then that's awesome for you. But for me, it's just not something I'm willing to endure. I just can't. I won't do it. Buyer's still being aggressive up here. Let's watch this 87 level. Back up into this upper distribution here. We've got excess on the high now. You had about 100 contracts trade on the top. You guys want to switch it up today? We could put the time and sales and the DOM up here. So it's starting to get a little bit more even here. 2169 call put counts. The Apple still looks pretty strong. If we pull over our weighted sectors here, we can see here. So remember, the red line's the close, green line is the open. XLK Technologies up, 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 up. XLC's up, XLI up, or B materials is down, real estate's up, and then this is just the ES down here. So everything for the most part besides real estate besides materials, excuse me, is above its open. And this is why the breadth is showing us negative, is because this is monitored from the close and this is monitored from the open. Let's do the DOM today, guys. Do the time and sales as Gives us more room for our TPO, which I like. Okay, so we're coming back to that 76, right? So we're coming back to a level where we had high volume. This is a spot where I'd like to clear all the volume off my chart. Look at the offers that came in here, 77.5, that same spot, but they weren't able to push down. Only 9 contracts traded on the half back. The market's kind of covering up there. So a little bit of short covering there. And notice all the buying that came in, 78, right? Simon sales, this is segregated by 10 lots or higher here. Notice the difference here. So remember these two inner sections here. These are trades on the bid and trades on the ask. You can see the trades that came in on the ask where the offer was more, right? You can see buyers kind of stepped up here. So now on the retest, see how aggressive they get. Only 27, so it went from 9 to 27, and now you've got 6 lonely contracts down there getting stuck. But no real aggression from these buyers yet, right? You see that how all these ask trades came through. This thing grew big time, but no move up, and then boom, they all covered. That's what that 100 lot order was probably a short a liquidation. A lot of longs that got stuck right here, shorter time frame traders, and they said, yeah, let me just hop out of this. Weak spot, 75 half. D period's coming down here. Damn, my internet's just being worthless today. D counts are climbing. 73.75. There's an order, 22 order that's aggressive. So it jumped through a couple of offers or a couple of bids to try to trade. Right here, the 73.75. So look for them to backfill that and hold. If they don't hold and it gets above, they're going to target that 75.50. So they come down, they offer it. Look, they failed right there on the first chance. They're going to come back up to the 75.50. So there's some aggression there. Two-way street right there on the 74. Notice how slow the tempo's getting down here, though. You know what I mean? Like, you're not getting any of this shove back down. If there was really hardcore selling going on down here, they should easily just kind of push it back down to that 72.50 where they, you know, where we saw, you know, people try and get in aggressively. There it is. Now let's see if they can break the open. Look at the offers moving down there. $72.50. Look at it grow here. $72.50. Aggressive order on the 72. No push through would indicate that maybe just short covering. They're trying. Look at that 72,000 lots traded on the bid. There they go. The thing that just kind of makes me nervous about these lows here is like, I want to go with this low, but it's just the tempo just starts to get so slow down here. Starting to see AMD really push the downside. There's the break of that open. See if they can flush it here. Oh, that's what it's praying for. Okay. Yeah, let me look real quick. Yeah, it looks like Wednesday. Yeah. You guys see the weakness here, right? Like, I mean, look at this here. The 72, they pushed it. So somebody pulled the bid. You get short covering naturally, right? That's short covering came in on that 70.50. Look at 72.50. As soon as they got back up there, they tried to re-short it, but it popped above. So you're just seeing, weakness in these sellers. Every time they get a chance to cover as low as they can, they're just covering. That's what's making me so nervous about trying to go with this downside, is because these sellers, every time we get close to the low, they're just kind of, bitching out. Apple's making a pretty significant retracement here too, but nothing really crazy. And look, here's that 75.50 level, the weak spot on the profile. Offer sits right below it on the 75, but that's going to be that last straw. Let's watch how it acts at this 73.5 again, or 72.5, excuse me. Sellers trying to offer that 73.75. They got stuck. They're trying to do it again. They're just weak. Yeah, I think so. I think that's probably a good estimation, Tommy, is that you're seeing, really mechanical traders, especially this B low is mechanical or poor low, and it's right on the open. So I think, it's showing that it's mostly just short-term traders, and it's showing weakness in the market on both sides, really, because we're not able to stay inside yesterday's range. but we're not able to break below yesterday's low. So the longer money, or the money that's short from yesterday, is closing below yesterday's low, right? And these sellers that were trapped from here are getting an opportunity to break even on their trade. So they're also doing the same thing. And so there's no strength here. And with that being said, as we know, short-term trading, or short-term traders, weaker handed traders, when they give up a reference like that, that's typically when we get that opportunity. So, the next trade that I'm kind of setting up after this, 75 half gets closed, 75 gets closed, is if we break this open, I'd like to see it break the Globex low right away. That would be easy target, and it's only 4 points, so it should be able to go. And I'd like to see it hold below the open. I'd like to see these buyers that were buying the open flip and start selling the open, and that would give me the opportunity to try to trade back down to that T2 low. But until that happens, until we start to stay below the open, it's hard for me to want to get short. I mean, there's opportunity to fade from the upside, but I don't really like that because that's inside yesterday's range, and you could just start seeing all these shorts overnight start to cover, especially as we come closer to 11 o'clock. What time is it? It's 10:21. 11 o'clock I think is the London close, or maybe it's 11:30. And if we assume that they've been short overnight all night, they'll start, the weaker handed traders over in London are probably looking to run out of the way as well. About to ask you getting back above that 72 strength for the time being. Yeah, I think so, Roach. Yeah, I think so. Dan, I'm debating withdrawing my crypto account again this week, but I feel pretty soon BTC is going to get very obvious. And a very long trade. I want to have a margin for a nice swing. Yeah, I mean, it definitely is, definitely a possibility, that's for sure. And I wasn't saying it like, hey, don't trade it because I think it's dumb. I there's opportunity in crypto 100%. I'm saying it like, if you're trying to be in and out of the market, if you're limited on time, because I'm not a big fan of not being able to watch my trade. Even when I would be in those long swing trades for crypto, I would be there. You know what I mean? Like I wouldn't be getting off the computer very often. Um, I didn't like to walk away from a trade, especially not with crypto, because you never know what's going to happen. You know what I mean? Like it could just shit the bed, or it could just, go on this huge runner and then come right back. And if you don't take profit on it, it could just, just really just kind of piss you off. Yeah, exactly. And that's one thing, like, it's hard for me to sleep with a trade on. Even still, like, it's just not something that I enjoy. Exactly. And then you're just like, what the fuck? So look where all the volume comes in on our TPO, or on our DOM, right? I mean, and the TPO as well, you can see. But 76. So 75, 75 was the weak spot before we cleared, right? They came up and look what happened. They covered. So that short-term seller that was trading with momentum from that level is out of the market now. They moved off. And so, I mean, we were basically just hunting a stop right there. That's all we did, was just hunt that guy's stop, and then we got it. And I've got my stop right now at 75.75. Well, now it just got taken for my last trade, but you know, you could give the opportunity, if you were a little bit less aggressive on getting out of that, depending upon where your entrance was, you keep your stop at 75, and this thing still can keep running for you. Look at all the volume coming in on 76. And then as soon as I say that, the market maker's, oh, your stop's at 75. Here, let me have it. Yeah. But that was just, I mean, that was just a pure, pretty much anchor trade, right? We just played off of the short time frame traders trade. And now we just sit here and we wait. So we see 76 was the spot. 74, we're seeing some aggressive selling. So I want to clear my volume and see at 76 how it acts again. Is this offer going to move down? You can see stacks of offers up here. Are they going to move down? The tick is still kind of yet to break above zero and hold. The weighted sectors are slowly getting, a bit more, a bit weaker here. Triple Q taking a decent bounce off of the 327.8 and starting to try to come back into the meat and potatoes of itself. For the most part, besides XLK, it's getting basically back to even. Consumer discretionaries red, communications flipped red, but healthcare, financials, industrial staples, energy, utility, and real estate all still green. Watch the half back. There's been even volume on the half back. So break above that half back, I think, is going to unleash the upside. I don't know. It's kind of interesting. It kind of looks like sellers are meeting demand up here. So it kind of looks like sellers are willing to step down, but they're just they don't have any strength to follow through, or they don't have any want really to sell at lower prices. Watch this 77 level. I think this could be the fulcrum here. 77. They do a pretty good job there holding that. That was mechanical selling on that 77. You see that it just came like right up to it. Offer move down. Where was our last? Bought that bigger money cover. 72 quarter, 72 half, and 72.75. So the bot got out. Remember what happened yesterday when the bot got out? Right. These sellers right here are stuck on 74 half. 63 traded and they immediately got absorbed. Look, 64. So these buyers stepped up right away. That's what I'm saying. It looks like there's a pretty even trade going on right here, and 77 I think is going to be our what they call the line in the sand, right? So, I think that you're decent to stay short below 77, but above 77 you don't want to be short. Let's look at the volume today as well. How'd the bot finish, Uncle Stacy? How many contracts? Oh, nice. Hedge. Oh, the averaging it. Thursday. Yeah, you would do that. Like if you're doing a swing trade, that would make sense, but on a day trade, that doesn't really make. All right, I'm gonna try a long from right here. If we can see some sellers get a little bit too aggressive and start to get kind of stuck down here, which is what I think is kind of setting up. Stop, obviously is going to be really tight here below this open. But there's because of this C high being mechanical and the tempo's getting really slow, volume's getting really slow. Might actually just wait till it pops to 77, but I'm trying to see here if we can find these guys getting too aggressive and start getting stuck. This is part of my plan. My plan was to take longs from down here. I hear that a lot. A lot of people tell me I'm too nice. Yeah, I hear that all the time. People always, people always want to hate. So they got stuck right here at this 72.75. Remember we had that 72, 72 quarter, 50, and 75 where all that short covering came in last time. So it makes sense right here. If they can't get it, they can't get control right here. We should be able to try this. We're only risking, 3.5 points, so it's not really that bad. We're gonna look for that 7. So I'm not a huge fan of the look here yet, right? Because it seems pretty evenly that sellers are willing to move down and kind of sell these prices. They're just not doing a great job at it. Aggressive seller hitting the 73. You can see the offer starting to grow. Fuckers. He's stuck. Bitch ass. Watch how the 73 acts on this second go. If it doesn't trade below the 73, we're pretty much solid on that. Okay. A whole new world. The market above half off to that 87. Look at all the buying coming in. But no follow through there. That's kind of a disturbing look here for me on the time and sales, right? So like I see the time and sales, it's pretty much all green, all these buyers coming in from 73 to 75, but yet when we got to 75, the market just kind of died off. Then you see some aggressive selling come in on the 74, pushing it back down, and now we're back down at that 73, and then now we're starting to see this kind of balance out. And that's showing, weakness, right? And then look, there's the liquidation there, right there on that 72. So all of these short-term traders that took relatively the same setup, covered there. Took for, a 2-tick loss, which isn't a bad opportunity. I don't really see that as a bad trade. A 2-tick loss is not really a bad trade to me, more of just a scratch than anything else. How many times are they going to knock on this door here? Weak spot above 72 quarter. I think it looks like it wants to break. Like when the profile fills in like that, you get that liquidation. Offer moves down below it. It looks like it wants to break, but shorts are covering right here at the open. But it looks like it wants to break. Down. That break. There it goes. Now here's the key. The Globex low, right, is what we talked about. Is it going to break this Globex low and hold, or is it going to get back above the open? I want to see, if we want to go short, right, if they're going to convince me to get short, it's going to have to stay below the open, and it's going to have to break that Globex low. We just keep seeing all this weakness here at the bottom, and it's like, it's pathetic. Yeah, appreciate it, Reyes. Thanks, man. Tesla's filling the gap. Oh, would have got back into a put. Oh, uh, if they're going to take this Globex low, there should be a decent amount of stops if it takes this low. You're seeing aggression here. You got another weak spot right on the open. So you had some people cover or liquidate, right? Cover their longs here, and then more people capitulate there, and this thing just pops right back above the open. So just pathetic right there from those sellers, right? Not even able to take that Globex low is just, it's sad. The open, it's a good reference point to see where some of the trades came from. Yeah, I think so. Watch this. This is that last weak spot here, 72.75. Let's trade same trade again, 71.75. Tick's still not above zero. Healthcare is green, financials green, industrials green, staples, energy, utilities, real estate green, technology, consumer discretionary, and communications all red. Consumer discretionary, let me pull this over real quick while we're just trying to reclaim the open here. Whoa. Yeah, I did. So you see tech is not down by much, but you can see communications here down pretty significant amount, and consumer discretionary starting to catch a little bit of downside, right? So you've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, and they're in order of weights here. So heaviest weighted sector is negative. The next one is positive. So if we do a little bit of this, we got negative here, -1, back to 0, -1, back to 0, -1, back to 0, +1, +2, +3, +2, +3, right? This is unweighted look, but you're seeing, because technology is not down very much and healthcare is up, these kind of cancel each other out, and then average the rest of these in, you're looking at a +3. So you can't be expecting like a huge move, but I mean, we can see where the market's at, back above its open, unable to find sellers below the open. Couldn't even break the Globex low. What's that movie? Pathetic. Just fucking, just, I mean, just like it sounds, it's fucking pathetic. And so now look to see, after they checked below the low, you're pretty much almost at a deadlock of that half back getting ripped off, right? Because mechanical selling came in at that high, it was the 77, and that's where we're going to look to see where that capitulation comes from these sellers. Maybe they'll offer it again, and maybe that was just short covering, and a break of that 77 will kind of give us that insight here. So if the market doesn't break that 77, that definitely shows weakness from buyers. And it would mainly just represent that you're having larger money short cover below the open, causing the pop. Yeah, the market is conditioned to buy the lows right now. The sentiment is like, you've got a lot of people that kind of missed this rally on the way up because they were trading price and not value, and they were using market sentiment and fundamentals, which we know are not as important, especially not when we're trading the overall market like we are here on the ES. Maybe individual stocks are going to differ a little bit, but now they're in kind of that panic mode and like, well, shit, I just missed the downside. And so what do? They buy. That's just, human psychology. Right. And then once all of the laggard buyers, right, Jim Dalton talks about this, the different, let me find it so we can, the different types of buyers and sellers. laggards and book. Here comes that 77, guys. Here we go. So this is what Jim Dalton refers to as innovators, early adopters, early majority, late majority, and laggards, right? And so basically when the market's trending up like this, we're pretty much seeing, you know, everyone kind of get into those laggard longs, right? C high still mechanical right off that B half back. You're seeing these people get into those positions where they're saying, "Oh shit, you know, I didn't believe that the upside was coming." And especially if we look at the bar chart here. I'm gonna grab this and pull it over. You look at the ES. Right? I mean, we just rallied it, you know, over 50% off of the lows, and now we're only 9% down for the year. All of a sudden, when we were just 20% down, you know, last month or a month and a half ago, everyone's like, ah, fucking housing crash, bubble, blah, blah, blah. And now everyone's like, well, shit. Now everyone's doubting themselves. And you can see it all over the sentiment. And I just look at YouTube video titles to find the sentiment of the market because I don't watch a lot of YouTube videos besides I watch that Civico Capital every week on Saturday. It comes out. And then I watch Tasty Trade every morning. They do like a little thing after the market, but I like to watch it while I'm working out in the morning, because I like that Victor Jones and Chris Vecchio. I think they're smart. And they're talking about the whole market. They're not going to give you any insight on how to trade the ES or anything, but I just like to hear their discussions. But like you're getting to that point where people are like, oh shit, I should have bought, I missed it. And so then you get those laggards that Jim Dalton talks about, and then once all the laggard buyers buy, those are the last buyers. And so if we zoom this out here a bit and think about it, oh fuck, I closed it. I'm going to cover up the TPO just for a second. We're just going to keep going up, so don't worry about it. We've got our innovators. So, and this is that previous low, right? So we've got our, you need something? Yeah, but you're not putting chocolate chips in it. Okay, and don't waste it. So you've got your innovators here, right? So someone decided to buy down here, right? Market pops up, holds the 50. There's your early adopters. Pops up, starts to balance this low balance, early majority. It pops up again, pops down. Now these people are like, oh shit, this is the time. Late majority. And then as we're squeezing up, where are we getting to? The laggards. All of these people that were just like, oh shit, I should have bought, I should have bought, I should have bought. They finally capitulate and they start to buy. Think about all the people that bought Dogecoin on the day of Saturday Night Live, right? Like, you know, they were just like, oh fuck. They bought it and they just nailed the top, right? They're like, ah, damn it, bought the top. And so think about that when you're trading, you know, because we can use it on a shorter scale like this, right? So where are these early adopters buying? They're probably buying here below yesterday's low, but you've got to think about the bigger trader. If he still likes the market, this is a responsive buy below yesterday's low. So he's like, anywhere that I get filled below yesterday's low, I'm okay with. And where do laggards buy? Here, trying to buy the breakout. Well, the breakouts worked for the past couple of days, but now the market has finally started to show a bit of balance, because where are we getting value overlapping to lower for the first time, in 1, 2, 3, 4, 5, 6 days, right? So we're getting the first time we're seeing value overlapping to lower at this point. And so this is telling us as an intraday trader that our trades should be responsive trades. We don't want to be taking these initiating trades or breakout trades because they're just, the odds of them working are just not great, because we're, for the most part, looking like balance, right? And especially if we were to separate this profile right here. I don't know how the fuck it did that. That's weird. Oh, because it closed on the low. Oh, we're not gonna be able to do that then. Well, I forgot that closed on the low. Spent all the time up here, and then yeah, and they trapped shorts. Yeah, and then it rallied the next day. But I mean, you can just kind of disregard this low down here, that weak structure. But I mean, you're seeing balance up here. Look, point of control is just barely higher. Point of control, and so you can. I mean, I kind of assume, I don't want to keep saying you can, but I am assuming that, after that responsive seller that we finally found, right after just searching up for it forever, that the market is probably going to balance in this area here from about 42.35. I mean, 42.50 was really where I would not like to see the market go below. I'd like to see it hold there. I mean, maybe if it comes down a little bit, but I'd like to see it hold above. And then that 4,300 is really kind of the high of that balance. Maybe the FOMC gives us some big moves and they push down and try to fill some of this gap, get back down into that lower balance, yet to be seen. But it's kind of telling us today that, we want to be a responsive trader today. Yeah, if we were up at the highs yesterday, right, that initiative trade breakout worked great because the market is in an imbalance. Oops. And so we think about this, and this is why it's so important to do your homework. You have the market in a balance here. Break out of balance is a go with trade, right? We put in that huge gap, never traded back below the open that day. Same thing here. Most of these initiative trades trading to the long side would have worked. This day was a tough day. I think that was Thursday, 8/11. It was Thursday, yeah. And my Thursday was my first red day on one of my accounts since March. And I'm not trying to brag or anything, but it was a tough day to trade, and it really fucked me up, and it really pissed me off, and that's why I took Friday off, because I was so angry that the day just, it was just a fucked up day and just pissed me off. I was just too early and too aggressive, and it just, really kind of just grinded my gears. But the next day we open up higher, and then the market just goes up. Next day, same thing. Next day, same thing. And today we're finally seeing a retracement. So the first sign of a initiative seller coming into the market is a break of that previous low. And here they goes, the market's trying to break the Globex low here. Let's zoom back in. Aggressive selling. Ding. 220 lot order. Look how thin the profile was on the way back down. A little bit of liquidation down there. Well, let's see if they can convince us here to get short. Vector's breath. Sorry guys, I went on a tangent. We kind of missed that downside. Thank you. So we get short covering there. Look at all the volume that came in right here on this 64 quarter. Look where the offers are stacking right here below that liquidation point. So they know that this is where buyers started to liquidate. Excuse me, they start to stack on those levels, and then we just want to see the strength of the response. And now we're starting to form that Brad balance that we talk about, that I talk about. That's the ABC. Oh, that's a good one. But I like the Bradinism everything. Like I have like Brad Pods, Brad Pros, Brad Pad, Brad Phone. I just rename. Wireless. Yeah, I like that. Yeah, it's just like when I leave my house and I don't bring my headphones, it's like Brad Pros were left behind. It's like, oh shit. So this will be the key here. So unable to when it retraced, it didn't break that 68, and we're getting back down to where that volume is at. So now we should be able to get convinced of shorts here, looking to trade and hold this thing below this Globex low. But it keeps bouncing up off that 64 there. Yeah, so this is just cumulative volume, and then this is bid-ask volume. Yeah, so if you guys are confused by this or it's the first time you're seeing it, this is cumulative volume, price, obviously. This is called a pulling and stacking column, where you can see people adding or taking away positions off of the buy. This is trades on the bid. This is trades on the ask. This is the order book, right? People, on. This is pulling and stacking for selling. And then this is bid trades versus ask trades. Offer is moving down here. Look to see how it trades. There it is. It backed off a little bit there. Gets lifted. No follow through. Look at all the buy trades came through on the 65, and the market ticked back down. Healthcare is flipped to red, so we've only got financials, industrials, staples, energy, utilities, and real estate green here, and the weighted AD is starting to make some red. The period opens up. We want to see continuation below this 65 if they're going to start to pile into this short. But, you know, I do think that, I mean, we do have some single prints above too, but I don't know how much movement we're going to get. The volume's really light today, and people are just kind of waiting for those Fed minutes, I think. Maybe you can do a picture one day and a written explanation of the columns. I still don't properly understand. Of course, I will continue to listen if I hear enough times. So, I mean, we could just, I could do a picture of it. But so here is just cumulative volume, right? Same thing that we're seeing here. The reason I like the DOM is because I'm able to reset it, and I see more recent trades, right? Kind of like how this bar here tells us more the last 30 minutes of trading, but this gives me even more granular view. This is just price. And so a pulling and stacking column. So imagine we have our DOM, and we'll just do 1, 2, 3, 4, 5 here. And then the same thing here, 1, 2, 3, 4, 5 here. So what this pulling and stacking column is telling us is if they're adding to this, and this is resting orders on the ask, resting orders, or, you know, resting buy orders, resting sell orders. And so the pulling and stacking column is telling us, right? So like there's minus 17. So people are jumping off of the bid. They jumped onto the bid. They jump off the bid, right? So as it's pulling green, and you're seeing, look at down here, we're seeing all these 40s stack up. So they're moving up. And you look up here and look at this, 157, 157, 123, 40, 40. So they're also meeting, right? They're not really pulling off very much. And so the tug of war, you know, kind of continues. And so that's basically all this is. So if you had a +1 here, this would be switching to 2. And this just tells us that someone from, you know, below, or someone from the sidelines is coming in right there. And so if we start to see something like this, right, see like all those reds, right, start to stack up, it would kind of tell us, or at least let us know possibly, that, you know, some people are kind of capitulating, right? They're like, okay, that's enough. I'm not going to buy it up here. And the same thing on the offer side, it's the same idea. And so if we start to see all of them stack up, right, this is kind of weak. So how come no one's moving up to buy right here, 67? So you're seeing less and less people start to move up. Here's a decent sized lot, but this guy right here is probably this 70 is probably a single trader. All right, this guy's getting ready to sell 170 lots up here at the 70, just above the open, because he thinks it's a fair price to sell. And you can see if you were having, you know, only 40s here, no buying here, then it's going to be tough for a buyer to fill this order. Does that make sense? And I mean, that's really like what it is. It's just like the push and pull of the market, or like the ping pong, right? The back and forth. I smack a ball, you smack a ball, you know, the buyer smacks a ball, the seller smacks a ball. We just try to identify where the buyers are going to step in at and where the sellers are going to step in at. And we can assume that this 70 level is probably I'm assuming that it's probably a take profit, honestly. So like a buyer that's in here is looking to sell just above the open. So I don't really think that selling is going to be strong. The next trade. Or you're talking about like which, where it trades at, the bid or the ask? That just matters who's aggressive, right? So we always have, I mean, this market's a lot more liquid than most markets. But so you have the price, right? This is the current price. You have the bid below, and you have the ask above, right? And here's the price. Okay, it's 56. We'll just say this guy's offering you a TV at 57, right? This guy is saying, I'm only going to buy the TV for 55. And so it really just matters, right? If this guy stays 57, 57, and then all of a sudden someone's like, you know, fuck, I want to get it. I'm just done. I'm going to sell one for 56. And so he moves down to 56. So he moves down right on the price. And then as soon as he does, a buyer moves up and goes, oh, I'll take 56. Boom. And it's the same idea. And you can see it. And then when you hear a ding, most of the time that means that someone either from the offer or from the bid moved through price to get into the market, right? So if you hear that ding, that's normally what that's telling me. Someone's being a bit more aggressive. And so this 57, he's selling the TV for 57, and he decides, you know what, fuck it, I'm out. He's not going to move down to price. He's going to move down. He's just going to sell into this bid. And this is kind of why I hate cumulative delta, because if this guy is moving down into the price, right? So if this guy is a seller and he's deciding, you know what, I'm done, I want to get out of the market, he can move down, sell to the 55, and he's out of the market. But there's no way to know that in cumulative delta, because cumulative delta just shows where it's trading at. So if you've got all these people, let's say we've got, you know, 5,000 people willing to sell a TV here, so you've got the 57 here, but let's say we've got 1,000 TVs that this guy's looking to unload, and this guy's on the 55, and he's looking to buy, you know, let's say 1,000 TVs. This guy moves down, sells it to this guy, but this guy's just getting into the market. This guy's getting out of the market, and the market can easily just go up. But on the cumulative delta, you're going to see a negative 1,000, telling you, I mean, literally telling me nothing. But a lot of traders that follow this cumulative delta see that as a big sell order when it could have just been old business, right? That's why I fucking hate cumulative delta. Yeah. Yeah, I can hear you good. Mm-hmm. Liquidation. I am. Yeah. I'm definitely considering that for sure. And that's you're spot on with that. For that though, we'd want to try to get shorter up here. Because you want to go, you know, a more advantageous spot for that short. But so basically, because we gap down, right? If we can't start to build value higher, right, which we're you know, building value, here's value area low from yesterday, so we're building value lower. So if we can't start to build value higher and inside yesterday's range, at least to get overlapping, and that would, you know, be all the way up here around the 90, then there's good odds that all of these longs that are in the market today are shorter time frame traders. And so at the end of the day, as we often see, these shorter time frame traders liquidate, right? And they're going to get out of the market. And so you know, if we get that, and you get like some of these, you know, pops up but fails to hold, there's opportunity to get that late day liquidation. Today is going to be a little bit tricky, TJ, just because those Fed minutes are at 2, so they're 2 hours before the close. But they're still, and that's kind of an opportunity. If the Fed minutes pop us up high and don't hold, that's going to be our ticket for that late day look. For that late day look to the downside. But yeah, I mean, we just want to wait. We just, yeah, right. And with today, because a lot of times you can look for it in like J in J period. J period's typically like a correction period or like a lunch period where people are like, you know what, let me take some risk off so I can enjoy my lunch. So that's, but today J period is going to be, let's see, what would this be? So this is 4, 3:30, 3, 2. Yeah, so J period is going to be like pretty much exactly at that time that the minutes come out. So it's going to be, I think you'll be looking for it. And I hate to say to trade M period, but M period would probably be the period to try to look for that today, which is typically a period I don't really like to trade just because of how much risk it normally carries, but definitely some opportunity. Yeah. Right. And there's so much like, yeah. And the information is kind of confusing because everyone is kind of in like that rapid, just get the fuck out mode. And so they're just, they're like on the bid, on the ask. And yeah, it is. It's like, yeah, you're like a point away. And then all of a sudden, boom, you get filled. And you're like, oh, motherfucker. So back above the open here, failure to hold below the Globex low. And look at what we're seeing. Look right where that weak spot's at, right on the open. Trades right back through it. So maybe that seller up at that 70, what did we say, 70 quarter? Where was that seller at? He's kind of spread out now. But maybe it was a real seller. Maybe it was maybe there was some real selling there above the open and that wasn't just profit taking. Down to the 68. The weak spot's 69 quarter. Tech is getting pretty well, it's trying to make a little bit of rebound, but it looks, I mean, it looks terrible. Let me show you guys this. So you've got tech here, right? Still just making consistent lower highs. Remember, this is a 15-minute look. Healthcare is pretty balanced, but kind of struggling to hold this open, and really a break of that low could unleash some healthcare. And now you've got a -2 on the two biggest weighted, and that's not great. And then here we go, -3. This one is positive financials, but starting to look a little bit weak here. Consumer discretionary still negative. Industrials starting to look weak, right? Flattening out. Same thing with staples starting to flatten out. Energy still looks pretty strong, just in a pullback. Utilities, not, I mean, they don't really matter, I guess, that much, but then you got materials and real estate kind of just flat as well. The volume overall, though, is still fairly low for the most part. But it does look like there's some, like I said, it kind of looked like that might have been a real seller there above the open and not just a profit target. Pull up the volume. Yeah, so Daniel, I do like the CVD for divergence. Yes. I just don't like cumulative delta, like intraday cumulative delta, right? So like if we were to find it here, cumulative delta bar volume, or cumulative delta volume. See how it looks. Well, it's just gonna look like shit because it's on the TPO, but you know what I mean? Like it's showing you the days of delta, and today, right, the cumulative volume is going up, and the market's pretty much one time framing down here. You know, two mechanical highs, D highs mechanical, C highs mechanical, but you know, even yesterday, you can see the cumulative volume was negative all day, but the market went way up. So I'm just not a huge fan of it. But there is, yeah, I do like the divergence that it gives off on crypto for sure. And I think it's more valuable in crypto, to be honest. So let's see that a test of that spot again could bring in some buying if the seller's not really willing to trade it again. Negative 8K. Oh, okay. Yeah, I mean, I don't think it works great on the TPO chart. Shit, hang on, I'm missing all this. Oh, I'm not sure, Tommy. I'm sure there is like a tool, but I'm not sure. Sorry, not reading the on a tangent and didn't read any of the chat. I'm sure there is something though. But they still hold. It does kind of look like they want to give it up here. But I mean, so if we keep getting these mechanical references to the upside, it's showing, you know, that's showing a bit of weakness. A little bit of confirmation would be if we can get some good volume down here and see this point of control shift down. What would tell us, or what would inform us that volume, value is going to shift down, is if E period trades back down into here to these two TPOs. The poor low is just a weak look of, you know, sellers just being not aggressive, just being a little scared action down there. Yeah, just because there's no real supply, and I mean, we haven't taken that A low yet, and we just keep coming back into that Globex range. Still can't hold below the Globex low, so you would assume, you know, if we're going to get some initiative sellers, they're going to push down below that Globex low, and this is the second poor low that we've put in now after, A period, moved down, B period came down, put in a poor low, C retraced a little bit, extended the range, and then D put in another poor low. It's just it looks like a two-way battle here of weaker-handed traders unwilling to really have any conviction. Right, exactly. Where's your POC? My POC is 69.75. I understand the seller at 70. Is that red line at 70? It's like right around 70. I have my TPO's on 2 ticks, so it could be at 69.75 or 70. It's kind of at that same spot. I wouldn't worry too much about something that's a tick apart. Yours is 2 ticks, yeah. Yeah, if 1 tick is a make or break point, that might be a sign of, and I'm not saying you, but I'm just saying in general, that might be a sign of over leverage. So buyers start lifting the offer there. Look at that 70. There they go. So there goes some stops. Now you get the weak spot right above the open. Now watch to see if the offers move down to meet the demand. Clear this pulling and stacking. Let's see what we get here. Look at this. Buyers moving up above the open to buy. And we're not seeing much sellers willing to move down to sell. Not yet, at least. There's some. VWAP's at 73. This chat box could be better. Oh yeah, that's true. Well, we could just do Discord instead, and I could just screen share on Discord instead of Zoom. And the chat box in there, you can post whatever you want. Oh, that's stupid. Because I have the Nitro on mine. Would it show if I'm streaming? Will it show the high quality, or everyone has to pay for it individually? No, that's fucking dumb. Yeah, fuck that. Yeah, that would make it a lot easier for me, for sure. All right, Daniel, have a good day, man. Yeah, that would make it a lot easier for me because I do have like the couple of chat windows up, and sometimes that's why I like they get behind shit and I just forget about them. So look, not able to trade back down to that 69.75 there. And so you're kind of seeing that tapering here off of above that open, right? You're seeing the volume start to kind of come in. And so as we get back to that half back, which we know was a bigger level earlier, it was actually that 77 was the previous half back before C extended the range down. But it was a level that mechanical sellers like to sell. So as we get closer to this half back, the 74, which happens to be the VPOC, that's where we'll look to see if more offers are going to come in. Look at this. Right, there's a offer coming in, but there's no teammates are showing up, right? Something that, oh, hang on, the settlement company's calling me. Hello? This is, yes. Oh, hi, how's it going? I'm doing well. No, I'm in Scranton. Yeah. Okay, and then will we just meet, where will we meet at to do the closing? Okay. Yeah, noon works for me. Yeah. Okay, perfect. Thank you. Bye. All right, guys. I'll just have to do my settlement on Friday. You have value area high at 77. How does that relate to what you have? Value area low, 64.75. So I have my value area based on volume. If you have it based on time, um, here, settings, value area highlight based off volume. Um, it didn't change it much at all, actually. You have value area high at 77.75. What do you have yours on? I don't know. You have yours at 79.50, which is, that's pretty much right where mine's at. Oh, okay, yeah. Yeah, this one is based off of volume, and I think the TPO is based off of time. I'm not sure how, yeah, and that's the thing is, like, I'm not really sure why, why it's different a lot of times, um, on different uh platforms. It's just how the platforms are articulating it, or how it's doing the math for itself. Yeah, I agree. Yeah, if they can't get it back down there and start to build 3 TPOs lower, we should at least probably try to take that C high. And so, I mean, basically, BJ, what I'm looking at, I'm not really monitoring today's value area as far as the highs and the lows of value. Like, so, mine's marking this as the low and this is the high. I'm more looking at yesterday's value areas. And then today, we've got 4 TPOs here. This is really where I'm concerned about. I'm concerned about this kind of little meaty area and what we're going to have to do to change value. So if we have, we have 4 TPOs here, we can take our, we'll take our blue, and we have 3 TPOs here. right? And now we have 5 here. And then we'll take our pink, and we have 2 TPOs here and 2 TPOs here. Our point of control is right here in the middle, and this is why I like this TPOs above and TPOs below. So TPOs above is 61 above the point of control, 56 below the point of control. You can see most of the volume has come in above the point of control as well, but we're not making any really significant downside. And then when we did, we turned right back to where our green box is at, you know. So if we could, I mean, if I could create something, if I was smart enough to code something that would say, like, incrementalize our value areas, right, that'd be great. But I'm just kind of doing what I'm drawing on the screen inside my head. And so what I'm trying to decide is, okay, well, now that E period's opening up and we know our meat and potatoes here is 5 TPOs wide, what's going to have to happen in order for us to go to the upside, or to move value higher, right? Well, we're going to have to extend this range. And if we extend this range up to the B high, that'd be 3 TPOs all the way up to here, right? And so then this box would change to blue, right? We'd have, if we got up here, we'd go from being, you know, 3 TPOs wide or 4 TPOs wide all the way up to there, right? If this E period were to trade all the way up to here, we'd have 3 TPOs. And then our 4 TPOs, you know, would be green. And I mean, you could make them whatever color you want, but 4 TPOs, so 5 TPOs because of the E, but we'd have 4 TPOs up here at this C high if E period gets up going there. But as of now, you know, we're just having it here. So we've extended the range of the current value, the fairest price where a business is conducted is that value area, but I'm just kind of breaking it down even smaller just to try to gain a little bit of insight, right? And that's why I like this bid-ask profile that I'm able to reset, just because of that same thing. And you could, you know, you could have a bid-ask profile like on a 1 minute or something like that, but for me, it's harder for me to kind of mash them all together and kind of see that. But I mean, you could easily just split each profile if you wanted to, and you'd have, you know, the volume just like that, right? So you could see, okay, D volume is down here, C volume is kind of all over the place, but mostly up here. E volume so far is coming in right here just above the open, and when it got up here, it looked like it ran into the C volume sellers. So this is where the C sellers were active. Now they're kind of pushing it back down, so we'll look to see D period, right where all that volume came in the last 30 minutes, the 68. Are these going to be buyers willing to step up below the open? You know, it sometimes it takes doing this. Sometimes it takes doing that, breaking everything down incrementally. The only thing is when you're doing that and trying to trade at the same time, it makes it super difficult, right? So, you know, as I was learning and as I was going through that, I would just break everything down to the 30-minute period, because that's really where I stay at. I do like the 15-minute on the sectors, because I think it gives us a little bit more insight if stuff's trying to turn around or something like that. And then the tick, I kind of flip-flop on the tick back and forth between 5 and 15, depending upon how the day is going. But on a muted day like this, pretty much just keep it on the 15, because a 5-minute might get you in a little bit of trouble today. But if you're trying to do that and trade, it becomes a little bit more difficult. And then you feel like you're seeing something and you're like, oh, well, how come that volume didn't trade? Well, most of the volume for the day, which is what we're trading, we're day trading, is up here. So we're looking at that D low, right? We separated it from here, and we see all the volume, and this D period was right here. You know, let's say if it didn't bounce right there, or if it doesn't bounce right here, and we keep trading through, but we bought this because we're like, well, that's where the volume's at, so that's where the buyers must be at. So it can get, you know, it can kind of get, you know, a little bit misleading. But I think it will help, and go back at the end of each session and do that, right? Something I do at the end of each session, and I just took it out of out of Jim's book. Let me pull up my email because I think I emailed an example to I emailed the one I did the other day to myself, and I was going to share it, but I forgot. It's not it. I email a lot of shit to myself. That's why I don't lose stuff. Uh, Earth. Here we go. Daily direction. Open it. So here, and excuse my shitty ass handwriting. And this was for the 12th, right? And this is just straight out of Jim's book, and I just have it on Good Notes, and I just copy it and then just do it every single day. Um, and I actually added, and thank you, TJ, I added your trade tracker into my Good Notes. Makes it a lot easier because I can just write on it instead of typing everything, which is sometimes a pain in the ass because I have my keyboard and then the iPad keyboard, it just becomes kind of a pain. Um, but this gives me a little bit of insight into what the market was trying to do the previous day, and I do this at the end of every day, right? Because doing it during the day, you know, is kind of hard. And so if we look at this one's from the 12th. Um, the fuck, get rid of this. Whatever. Where's the 12th at? So here's the 12th here. Yeah. You can see rotation factor, right? 19. So I give that to the buyers. Range extension was to the upside, so I give that to the buyers. Tails, we had a tail on the upside and a tail on the downside, so I give it to both. And then I write spike just to remind myself. Buying and selling composition. Well, most of the buyers came in and the range extended up, so I gave that to the buyers. Overall attempted direction was higher, right? Little comments, market one time framing higher from B period till the end of day spike. So pretty much all day this day, we just, one time framed after that B buying tail got set in, letting me know that this is probably a buyer down here, or at least a decent size player buying that low. Directional performance, trend day to the upside, low volume indicates weakness, right? So back on the 12th is when I started being a little bit more skeptical of the upside because of the weak volume to the upside, right? Daily, we wrote the volume here. The average you can get off the CME website if you're looking for the average, but to me, not even breaking a million volume. You can see not even a million volume is a pretty weak volume. What, buddy? Yeah, ask Maya to make you a sandwich. Or I don't know if we have any bread. You might have to use tortilla. Um, Value area placement, overlapping to higher. Value area width was narrow, right? We only had 4 TPOs, and then for the rest of the day, it was really, really thin. My comments, market trend higher as a spike rules in play. And then my expected results, this is for the next day. Market looking to continue trend higher or balance, approaching area for responsive selling to be active, right? And so, and this is kind of how I group everything in. I'm never just looking at the previous day. I'm kind of looking at all of the information, and that's what made me skeptical this day. Yesterday, if you remember, I closed my trade way too early, like a little baby back bitch, because I was kind of, nervous about getting that responsive seller coming into the market. And that's just right out of Jim's book. And I just, printed it to PDF and then sent it to myself on GoodNotes. And I meant to share it on the 12th when I emailed it to myself, but I just forgot. 3 lines? What's that 3 lines? Austin, what are you talking about? Put calls 1 to 150, so it's getting pretty downsidey. For what? Just put it on there, right? Just don't put like an extravagant amount. Just put a normal amount. You don't have to measure it. I never measure it. So we see the offer on the 65 that came in. I'm going to clear this. Just remember that number though. A little bit of extension down there on the low. If we're going to get some continuation here. Remember, a lot of times a poor low is, a lot of people call it a double bottom and they show it as a bit of strength, but because we're tracking the auction, oh, that would have been how to get rid of it. Thank you. I remember that. Because we're tracking the auction, a poor low is really just kind of telling us that shorter time frame traders may have just gotten a little bit too short, and it's actually a weak reference. So technical analysis kind of tells you a double bottom is a sign of strength, whereas for us, we're tracking the auction and we kind of look at it as a weak spot. As it gets close to it, has better odds to get corrected. And you see there's a little bit of excess down there. We've got 3 TPOs here down on the low. Aggressive selling there. Well, now let's see if the sellers move down here, and it does look like they are. 60.75. Look at that offer moving in. We know that little pop down was just a little bit of liquidation. These buyers capitulating and, smashing their way out of the market. Let's see if sellers move down and take opportunity here. There they go. I didn't catch this short. I'm not in a trade. There's that T2 low. Mechanical low there. So decent odds that it doesn't hold. And so let's say you missed this short, right? As did I. What I'm looking for here to get that opportunity to get in is to see some of these sellers, right? You're seeing these people sell right here, not doing a very good job. But I'd like to try it from here, where we saw that capitulation, right? And or maybe from here, and put my stop just right here back into the meat, and then target just below the low, because we know it's a weak low. Mechanical buyers buying the low, get an opportunity to get short anywhere in this area here. That should be enough space, and you just give yourself a tick of excess. And if you lose the trade, you lose a point, you lose a point and a half, whatever. That's part of the opportunity. But a break of this low could really start to run, because we're getting below that T2 low. So everyone that's long from these past 2 days, as the market's going back down into these single prints, is going to be getting a little bit nervous and probably starting to capitulate a bit. Oh, let's see if they can take it. So there we just took the low. Now you should be able to move your stop easily in for break even. We're just at the 58 here. And just hold your stop at 58. If you get taken out, you get taken out. No big deal. But if these sellers are serious, they can move down and you can catch a nice little runner here. And they're running out of steam a little bit. A couple ticks past that low. Still good here. I'd like to see a little bit more though. Nah, I'm out. That one got me. I'm just being such a little bitch lately. Then it goes without me. Ah, that's tough. Trading a bit. Well, maybe not the wrong decision, I guess. We'll see. Really, financials is the only thing that's green, and it's just barely. I mean, it's right at its open here. Let me pull this over. So you can see tech negative, healthcare negative. And there goes more or less the low. Consumer discretionary negative, financials right at its open, communications negative, industrials negative, staples negative, energy pulling all the way back to its open as well. Same thing with utilities, XLB's negative, and you're starting to see the market catch a little bit of downside there. Motherfucker. And sometimes you put your stop too tight and it gets you. And that's the thing too, like I want you guys to know that you know, I'm not a perfect trader. That's for sure, right? I make the same mistakes that everybody makes, right? It's just part of the process. You're not gonna, you know, you're not gonna sink every putt. Said again, stopped out all day, so I just had to go in my favor. So I just decided to put my entry where my stop would be. So I'm long from 67 and I pulled my stop way down to 42.45. 45. Where's 45 at? Right down here in this lower distribution. And you're long from 67? Oh, so you're long from way up here. That's a tough one. Not having a good day. Oh, 62. Yeah, of course, Roach. I mean, anything I can do to help it, and if it does help, it's just I don't want everyone thinking that the oh 62. Oh, okay. So you're just yeah, I mean, you're not, you know, you're not, I mean, that's a lot of risk. You just be looking for the high, I guess. If you're going to risk all the way to 45, you're talking about what's that? What, 15, 17 points? I mean, I honestly don't think that's really too bad of a trade, honestly. That 62, like, I mean, it probably could have waited until to see how it acted below this T2 low. Um, but you know, it's not a bad spot for a responsive trade. I would probably put my stop at the 50, or maybe even a little bit, you know, you said 47, that's really not a bad spot. Looking for, but you just got to be willing. So if you're taking that much risk on the trade, you've got to be willing to let it go up here, right? So you've made your plan. I don't know where your profit target is at, but you've just got to be willing to let that thing come all the way back up into that 78 to make it worth your risk, right? And right here you've taken, you know, you got 62 to 50, let's say 55, so only a 7-point risk, right? You're looking for a total of you know, what's this, 62, 72, 78, so 10, 15, 16 points. So you're risking 7 to 16. That's basically a 2 to 1. That's not really, I don't think that's a bad deal at all. You've just got to be willing to let it work out. And you can, of course, mitigate risk, right? So let's say now you're like, okay, well, the E low is my risk. And so, boom, you put your stop below the E low. I don't think that's a really good spot to put a stop, but, you know, you could move it from the 47 to the E low. I think that you might need the room. But let's say you did, that's the only way that this profit target can come down in the way that I trade. If not, and it could, yeah, go ahead, Maya. And it could easily do a bunch of this, and you're like, fuck, you know, and especially if it's above the 62, you're in profit. But unless you're willing to move, you know, to move that stop up initially, because that should be the first thing that moves, right? Because you want to manage risk first and then decide, okay, is the move going the way that I wanted it to go? You know what I mean? Um, but I mean, yeah, I understand. Like, I mean, sometimes it is, you know, you have those days where it's like that. You just want to, those are the days where, you know, you just switch to the sim and then, you know, take your anger out on the sim. Once you start taking, and even then, like, it could just form a little bit of bad habits when you start just sim trading on crazy mode, but it can be a lot less detrimental to your real account if you anger trade on the sim than if you do on the real one. You said you normally treat that 61 half like you would trade singles on a TPO because it's right. Right. Yeah, that makes sense. And the volume's, you know, volume's really thin there. So as this retraces, you could, yeah, look to get short in that area and then use this spot up here, like that 63 half as your stop, as your spot to confirm that they're not moving down. Yeah, yeah. Okay. Yeah, so look at it as like how I look at it as is more of like a backing and filling, right? So we got that capitulation from the sellers or from the buyers, excuse me, right? They capitulated, and that's what gives us that thin spot because everyone's racing to get out of their trade. And now we want to see where these sellers were active and I think we saw them on the 65. We want to see if they're willing to come down and sell in this area. So yeah, we might come up and get a little bit of chop in that area. That gives you that opportunity to short, and then just, you know, put that stop. I like that 63.5 as a stop right here. If we get back up to like the 60, 61.5, 60, that same area that you're talking about, I think that is a good opportunity to get onto this move down, and then maybe put our stop at 63.5, and we'll target the low. Because this low looks unfinished. If they're willing, that's what they should do. It gives them the opportunity to do that. So what I'd like to look for is for them to try to backfill this area, and it convinces a lot of buyers, especially volume profile traders, that are like, oh shit, we're seeing a shelf form. It's a fucking launch pad, right? And they're not paying attention to where value's at. Value's lower today, right? And so they come up in this area, all these buyers move in, the stronger seller moves down and just slowly accepts, and then once all that momentum buying runs out off that volume profile, they disappear, and then boom, trade back down to the low. There's 300 contracts on the low. There's good odds that low is not going to be the low of the day. Yeah, I agree. I agree. Exactly. And the profile is really weak right there on the all the way up to 61.5 is where that, like, the last kind of weak spot is at. So that's where we'd look to see these sellers really try to pile in, is this 61.5. Right. Right. And then we all want to pay attention to the tempo too. So if we come up here and it just shreds right through that level, well, we don't want to just be having a resting order there. We want to see it come up and hesitate, and then boom, that's when we want to hammer it, and then a nice tight stop. But if it just shreds us through there and it doesn't trade this weak volume at all, well, that just tells us that these sellers aren't willing to move down and backfill this area. But yeah, like you're saying, we could, there could not even be a filling opportunity, because might not be a retracement back up there. I'll be right back. What's that, Curtis? Okay. Oh, here we go. F period opens up and we get an opportunity to see what these singles are all about. The sector's selling is slowing down a little bit here. Weakness. There it was. Second chance. Eight contracts on that top tick. That's weak. So look to see. Not always. I mean, these single prints here below us have held since the 12th. And it tried to retrace a couple of times over here, just didn't. Not saying that it's not going to just blow through it today, but it's just that it didn't. The fuck? They are. But it's going to be based off of context. Right? So we've got to understand the context of the day as well. So this is an area where we're looking to see these sellers come down and start to sell in this area. So we've still got looks like one little print of singles here. One little print of singles. And this is an area right here where if these sellers don't move down, you'll probably cover back into the meat and potatoes. But right here is where I'm going to try to put this short on. We're seeing some buyers trying to be aggressive up here. Here comes that 63.50 level. This is the area where I kind of want to see these sellers start to really push this thing back down. If not, it might just be getting weak. But it does look like they're trying to hold. F low is mechanical off the T2. Yeah, it did look like that. It's blowing me up. Yeah, they don't look very aggressive though. Yeah. That F high is right off the Globex low as well. So that's a mechanical F high too. So just be careful on both sides of this. I am in a short though. Not looking great though. Distracted. We'll keep fucking texting me. Gotta go today. Yeah, Patrick. Thanks for hanging. So it looks like these sellers are meeting here. We're seeing value shift down now. And you're seeing, kind of this little gap here, this gap in value. Overall, the profile looks pretty balanced for the most part. I mean, besides this little kind of weak little spot right here. And so we can kind of assume, and that's what I'm going to kind of use as my stop here, is this reference point. Value for the most part is fairly even, but if we don't fill this in, this kind of makes me think that sellers are still willing to hold. If we start to fill this in, we get back to the open, and then I'll have to take a decent loss there. But we're right back at this is where I'm entered as 63.50, so I'm still holding pretty negative, down about 1.25 points. And so like I said, I'm short from 63.5, and as we're getting a little bit above my entry, and I'm not really seeing what I want to see yet. Not that I'm seeing it on the opposite side either, but it makes me a little bit more willing to flatten my trade for a break even, because I just took 3 points of heat right there, and then now we're back to my entry and not seeing what I want to see. Right, I'd like to see us really kind of push back down, especially down below that 63 where sellers tried to hold originally, but didn't. There we go. Elon's listening. He's like, oh, you want to go back below 63? Here you go. I got you, Brad. And that 62.25, you see where that weak spot's at, that 62.25. That's where I want to see us really kind of, I want to see it just shove below there. I want to see some aggression sit below there. Sell that off for you fuckers. Here comes that 62.25. Still not able to trade there though. And you see those buyers kind of stack on that 63 again. Come on, take us down, you little bitch. There they go. So look, they move down, they fill that in. That's decent information there. We popped above it, but we didn't pop too much above it. But there was some people willing to sell right here. This just might be one of those trades where you got to just call it. Not giving us. I wanted to see a nice shove. We saw some people try to fill it in, but buyers just kind of soaked it right up. I don't know. I think we're going back to this 57. Is this low? Oh, that 57. That is the low. Okay. The 60 order. You're seeing them offer this 62.75, right? They're trying to offer this level here. They may push to 60.70 if above the last high. Yeah, I mean if they can get above the open, yeah, then that could be that target, that 80. But yeah, 50 I think would be like the low end of like a balance. If we start to balance up here, I think that would be the low end of balance. Buyers would probably step in pretty heavy at the 50. Yeah, I'm pretty hungry as well. We're on pretty late today too. It's F period. Normally we get off during E period. Here we go, making a little bit of progress here. I like it. I like it. Bit coming. But watch this 60-ish levels, 59.5. That's going to be where that shelf is at. And so what we'd like to see, what I'd like to see is I'd like to see some volume start to come down and fill this in. And then I'm going to add some size here and target that 57 and really this low 55, because I don't think that 55 is the low. That's just, yeah. Yeah, they're trying to form it here, but they're buying just a previous bar low. That's a mechanical buy there. I think that's just fucking weak-handed traders trying to just buy at a spot uh to try to average in, and I think they're fucked. And we can assume there's going to be buying here because so many volume profile traders out there. Volume profile might be the most popular tool this year. I think I see it like on every video I watch on YouTube. There's always like, volume profile is the most important thing in the whole wide world. That Thor look. Is it though? The volume profile kind of reminds me of like if you were playing baseball and the pitcher told you what pitch he was going to throw and where he was going to throw it, right? Are you still going to hit a home run? Right? Let's say you're a home run hitter, right? Because I've been watching the fucking Yankees every single time they're on TV, and I've seen Aaron Judge strike out by a fastball down the middle that he misses more times than I've seen him hit a home run off of it. And I mean, he's a hitter, and he just looks at the ball and the thing jumps over the fence. But imagine if they told him where it was going to go every time. And I'm not taking anything away from Aaron Judge, because hitting a baseball that's going 99 miles an hour is no easy task, that's for sure. You got to start swinging before the ball even leaves the hand, you know what I mean? Or start lining it up. But it's that's kind of what the volume profile reminds me of. It's like, okay, well, here, this is where buyers showed up, so I should be able to buy there. And we're kind of seeing the same thing here, 63. So it looks like these buyers are kind of moving off of that the low, and buying this previous low here. It's like, so they see the pitch coming because they've seen that the pitcher told him the pitch, and this is where he says he's throwing it, but they're not really paying attention to everything else that's going on. They're just saying, oh, this is a good spot to buy because everybody bought it before. And then you get into that sheep mindset where it's just, oh well, if it worked before, it'll work again. And I'm not saying that it won't hold, because it might. Might lose this trade. Uh, every trade is either a win or a loss. 50. Healthcare made a decent little bounce there off the lows. Financials bounced off of its open. We are starting to see a little bit of buying. Come on, value very high. And nothing really happened. It just closed those singles and then popped up. You're seeing a lot of volume come in down here too. Well, I don't know if I'd say a lot, but you're seeing volume come in down here. $65 here on the way back up kind of tells me that maybe some people are just covering shorts here. Get these weak-handed traders out of the way. So look at that 65. Yeah, I think shorts are covering on that 65 right here. Right. I just have one lot on, so it allows me a little bit more flexibility when I start to build a position. With one lot, it really gives me a little bit more flexibility as far as where I can place my stops and things like that. But right now I'm about 2 points in the red still. Now I'm 1 point. So we saw shorts cover on the 65, right? And then that's what we noticed. Look at the bounce up. Nowhere. It went a point above 65, right? Went up 66 half right there, traded 8 contracts, and then came right back down to the 65. Then more shorts cover right below it, right as I say that. We want to see the strength of the bounce would tell us if buyers are going to step up and buy this, or if it really is just short covering. And if it's just short covering, that's not really, that's not real buyers. That's not new money buying. That's just old business. Time is it? 12:21. Still the minutes is not for an hour and a half too. Curtis, did you bolus for lunch? Oh, okay. Remember we were talking about this little space right here. That's kind of where I'm watching this. Bull's trying hard to get the open price. Yeah, I mean, yeah, it does. And the market just, it looks like it's balancing itself out too, right? So they filled in this kind of weak spot right here, um, and the profile balanced out there. Now we've got this buying tail, selling tail, a pretty decent balance here. I still kind of like this trade though. Yeah, I'm not gonna hold much longer. This thing doesn't find some selling. The Nasdaq's starting to tick up here pretty hard too off the low. So you might be seeing a little bit of rotation back into the market. Technology's pumping up hard too. Yeah, I'm just gonna have to cut this bad boy for a loss. Goes. Can't win them all. You know what I mean? So a little about a 7-point loss it looked like. Where's that close at? 69.75. Yeah, so six and a quarter point loss there. Can you? And that's just, I mean, that to me, that just shows me that I was just impatient, right? Because I honestly think it's going to come back down. I just had bad timing, bad patience. I felt like, and it was probably due to that first short that I took down here, closed it a little bit too early, and wanted to get back in and got in at the wrong spot. Um, just that part of the game really just happens. That thin spot right here, right on the open. So the capitulation from these sellers, and look at all the buyers lifted up right above on the 70. We're almost seeing our weighted AD sector flip over here too. Let me pull this over. Um, yeah, yeah, there it is. Seeing the weighted AD sector start to get back close to that zero level, and healthcare is flipped back to green. Right, healthcare had a strong bounce down from those lows. So it's kind of back to being a mixed bag, back into the rotation. Oh, oops. Yeah, we got about 4 minutes left. I think I'll just call it there. Remember what I was talking about yesterday uh, for the minutes when they come out. I'm gonna jump on Josh's channel, and let me pull up his channel real quick. Nothing better than hitting a run and coming back to a winning trade. Nice. 0. We're going to 0. We could, yeah, maybe. Where's Josh's channel at? Is he not live? What the fuck? No way. He's always live. Okay, here he is. Okay. So just go to stock market, type in stock market live. His channel will pop up. This is what it looks like. This is what he sounds like. He's a pretty cool dude. He's an options trader. But he has really fast news. He's got a lot of people in his chat. He pretty much trades the news, the options off of the news. And so I really like to listen to him when these big news events comes out, because normally he's on top of it with kind of breaking down the information as far as, you know, what it means. Because I'm not big into, you know, to knowing if fiscal policy and blah blah blah. Like I just don't have the intestinal fortitude to actually like read through that kind of shit, where he does, and he enjoys it, so it's easy just to go to him and listen to him talk about it. You know, he's not a trained expert or anything, but you know, he is live every single day, Monday through Friday, fucking market open to market close. And he has a really good philosophy. He's a really cool ass dude. He's from California as well. He's got a really big following, you know, so that's where I'll be. So if you see me in the chat, that's where I'll be pretty much listening to. It doesn't look like it's going to be a swimming day. Kind of looks kind of shitty outside, so I don't know if I'll be doing some swimming. But yeah, I mean, that's where I'll be at 2 o'clock, trying to listen to the Fed minutes. I think he's got a really good grasp on stuff like that, and so I like to give him a. I mean, he's got a fuckload of followers, so it's not like the 40 of us that are rolling over there are going to make a difference for him. But you know, just if you're looking for some information about the minutes, that's where I would go. Hey Brad, I was checking the range about 3 days ago, and the range was 74.5 2 days ago, 5 yesterday, 48 today. Today's range is kind of in the middle between 74. Do you think that's why today is so slow? Not really, Reyes. I think today is mostly just slow because of the minutes, right? I think people are anticipating those minutes coming out, and kind of just waiting for that to kind of take shape, to kind of decide on, you know, what it's going to bring. And I think the big key today is you know, pay attention to if there's new information that come out in those minutes. If the minutes come out and they're talking about tightening or continuous raising rates, then I think that's going to maybe trigger some stops, and people are going to short the market. If they say that the market looks great and they want to keep it going up, and you know, that kind of stuff, then I think that then we might blast up to the upside. So, but yeah, other than that, you guys have a wonderful rest of your day. I will be around in the Discord, so if you guys need anything, just give me a shout. Make sure that you are managing risk and sticking to your trade plan. And if you are not in the Discord, shoot me an email. And if you don't have the Discord link, just shoot me an email. But if not, you know, I'll just see you in the Discord. You too, Dan. See ya. See you guys.
Hey guys,